Welcome friends, in this video we will analyze whether Xcn coin is starting to attack. Don't forget to subscribe and like, and please watch to the end to understand. Looking carefully at the chart right now, we can clearly see that a distinct downtrend is forming. Price action has repeatedly touched this trend line, but has so far failed to make a strong breakout. This suggests that there is a certain resistance area in the market and the price has not yet gained enough momentum to break through this level. However, in technical analysis, trends don't last forever. They are inevitable to break at a certain point. The continuous testing of this downtrend suggests that the price is sensitive to this level and there is potential for a strong move in the market. Usually, when the price touches a resistance level multiple times, it gathers more strength to break through it. So the probability of breaking this downtrend increases with each touch. If the price manages to break above this trend with enough volume support, a strong bullish momentum could build in the market. Downtrends, in particular, are of great importance for investor psychology, because as the price moves within the trend, investors may become hesitant and lose confidence in the market. However, when the trend breaks to the upside, this psychology is reversed, and buyers quickly start to join the market. Therefore, an upside breakout of the downtrend will be a critical threshold for the price to enter a stronger bullish wave. If technical indicators also support that the price is preparing to break this trend, this positive scenario will be even more likely to materialize. In particular, an increase in trading volume may make the price's break above the trend stronger and more permanent. If the price stays above this trend, the next target will be the important resistance zones, and the price could move quickly towards these levels. And it should also retest after breaking the trend. According to the Elliott wave theory, when we analyze price movements, we can clearly see that the first and second waves have been completed. The current phase may be the beginning of the third wave, which is generally considered to be the strongest and most decisive bullish wave. According to the Elliott wave principle, the third wave is when traders make the most gains and the market has the strongest bullish momentum. At this point, the potential target zones ahead of the price have become clear. The levels that the third wave is expected to reach are important resistance zones marked by the yellow and green lines. In technical analysis, the third wave is usually stronger than the first wave and has more momentum, because at this stage, market participants recognize the bullishness and start buying more. This indicates that buyers are gaining strength, the market is entering an uptrend, and the price is gaining upward momentum. In the Elliott wave theory, the third wave usually reaches the 1,618 Fibonacci extension level, but in some cases it can go beyond it. What this means is this: the market may now be at the beginning of a strong uptrend, and the upside potential of the price is quite high. If the price action is supported by technical indicators, a likely scenario is that it will first reach the yellow line level and then move towards the green line area. One of the most important reasons why the third wave is so strong is investor psychology. When the uptrend starts in the first wave, many investors are not yet sure whether this move is a real trend or not. In the second wave, there is a correction, and some investors panic and sell. However, when the third wave begins, more traders enter the market, seeing that the trend is now clear, and the price action gains much stronger bullish momentum. This phase is usually supported by high trading volumes and attracts large funds and institutional investors. If the price gains upward momentum from the strong support levels during the third wave, this may make it easier to overcome the resistance levels ahead. Especially if the overall market outlook is positive and fundamental analysis is bullish, the chances of the price reaching the Fibonacci targets set during the third wave become increasingly likely. The yellow line level is the first potential target for this move, while if the price gains more strength, it could reach or even exceed the green line level. We need to be patient for the third wave to arrive. The MACD indicator is one of the most reliable indicators for analyzing market trends and predicting the direction of price movements. Currently, we can see that the MACD lines have moved above the zero line and are moving upwards. This suggests that the bullish trend is starting to strengthen, and the market is attracting more and more buyers. MACD moving above the zero line is usually considered a strong bullish signal and indicates that the market is gaining momentum. If this movement continues, it is quite likely that the price will reach higher levels. At this point, we can observe that the MACD diverges significantly from the signal line. We can say that bullish momentum increases, especially as the distance between the MACD lines widens. This signals that the market is preparing for a stronger upward move and indicates that buyers are becoming more active. The MACD in particular, staying above the zero line confirms that the market has moved into an uptrend and buyers are now taking more control. This is a very positive development in terms of the overall direction of the market because MACD movements below the zero line usually represent a bearish trend, while movements above the zero line are usually bullish. Therefore, the MACD moving above the zero line is a strong signal that price movements may gain upward momentum and traders can make safer buy trades. In addition, the MACD's upward movement by maintaining its current trend also contributes to a more resilient market structure against short-term corrections that may occur on the price. That is, if the MACD continues to stay above the zero line, it indicates that the overall momentum of the market is strong, and short-term declines can be considered as a buying opportunity. Such situations usually signal that the market will continue to move upwards for some time. If the MACD lines can sustain this bullish momentum and stay above the zero line for a longer period of time, it may be possible for prices to test and even break through new resistance levels. In such a scenario, the overall market outlook will become even more positive and investors' confidence will increase. This, in turn, could help bring in new waves of buying and help prices reach higher levels. There is nothing negative for MACD, everything is positive. RSI is an important technical indicator that measures market momentum and helps us identify overbought or oversold areas. Especially in trend analysis, the movements of the RSI are of great importance. At the moment, the RSI indicator is showing a long-standing downtrend line. However, recent movements show that this downtrend has been broken and the RSI is now starting to shift to a different structure. This is a very positive development for the market because the RSI breaking the falling trend line is usually one of the early signals that the market is starting to gain strength. In technical analysis, such breakouts are critical for price action and provide traders with important information to predict future price direction. A downtrend breakout indicates that the market is gradually recovering from selling pressure and buyers are gaining strength. However, each breakout is usually followed by a retest. That's exactly what we're seeing the RSI doing right now. That is, it's pulling back towards the broken falling trend line, testing whether this area will now work as a support. This is a very common market behavior in technical analysis, and traders should watch such retests carefully. If the RSI moves strongly upwards after touching this trend line, it signals a further increase in buyer power in the market. The retest is an important stage that tests the psychology of traders and the overall momentum of the market. Because it's not enough for the RSI to break its downtrend, it's important to see if the breakout is permanent. For the time being, the RSI coming back to its broken trend line indicates a technically healthy price action. If the RSI doesn't fall below the trend line it broke and holds there and continues its upward movement again, the market can be expected to gain strong bullish momentum. Such breakouts and retests are often closely watched by traders because in technical analysis, trend breakouts often have a direct impact on price action. If the RSI holds at this level, there's a good chance that prices will continue to move upwards. This could help to create a positive sentiment in the market and cause traders to strengthen their buying positions. In particular, if the RSI reacts from this level and moves up again, the market may reach higher levels. Especially if the RSI manages to stay above the 50 level, this could give a positive signal that the market is in a strong trend. The RSI 50 level is a critical threshold that is often used to determine the continuation of uptrends. If the RSI continues to hold above this level, the market could gain a stronger bullish momentum. At the same time, it can be useful to monitor volume movements during this period, as volume increases in line with RSI movements, are an indication that the trend may continue more solidly. The RSI's retest after this downtrend breakout can be a much stronger signal if it is also supported by price action. If the RSI starts its upward movement again and the price is also bullish, then a stronger continuation of the trend can be expected. Usually in such cases, price action will also move in parallel with the RSI's signal. When the RSI finishes its retest and starts to move up, the price will also start to move up. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.